Hello traders, the title of the video is Barrick Gold Stock Critical Price Level Trading. So the epic for Barrick Gold Incorporated is GOLD, that's gold, as Golf Oscar Lima Delta. We're going to talk about the proprietary trading tool that we call critical price levels. There are six specific critical price level that we use. I have been asked by a TSTW SYS008 trader to explain more this topic of a critical price level, and most importantly, how can we use them and how can we trade using the six critical price level. Now, what we do with the six critical price level is that at the beginning of the year, 1st of January or first week of the year, all right, or end of the year, all right, we go to the yearly chart. So I'm on the yearly chart now for gold, Barrick Gold. And what we do, the yearly candlestick bar that has closed on the 31st of December, okay, we highlight the opening price. That's the critical price level number 1. We highlight the closing price. That is the critical price level 2. Then we highlight the high, which is this one here. That's the critical price level 3. And then we highlight the low. That's the critical price level 4. And then on the first trading day of the new year, we highlight the opening price level of the new year, and that is the critical price level number 5. So end of the year, we do all this, concentrating on the year that has closed. All right, the opening price, critical price level number 1, closing price number 2, high number 3, low number 4. And then when the new year candlestick bar has started, the opening price of the new year is the critical price level number 5. Okay, so we just running. Those are just horizontal key levels that a lot of traders are watching. Hedge fund pay attention to those key level, the critical price level 1, 2, 3, 4, 5. But there is another critical price level that is the most important critical price level. That is what I call the smart median line. Now, some traders are not aware of it. Hedge funds are not aware of it. Those are my own discovery, so to speak. Looking at the chart, try to find things that can work in the financial market. What is happening all the time? The price is always deviating from a key level, so it will find a support or a resistance at a key level. This is what's going on all the time. And then it will bounce from there, which means bounce away, up, or bounce down. This is what's going on all the time. See here? So you see the price was coming down, you find a support at this key level, and then it bounced up. This is what we call deviation. And then sometimes the price will come back to those key levels. So it is critical for us, technical traders, market participants, and investors to know the high impact, okay, support and resistance level. And the 6 critical price level are powerful key support level. All right, so we can draw them. Sometimes the price will go away from those 6 critical price level, which means it will break above the range of all the 6 critical price level. Now, in that case, we can project the range of the smart range. I'm going to come to that in a minute. What is the smart range? So talking about the number 6 critical price level, which is the most influential critical price level, what we call smart median line, we count 5 years. So 1st of January, okay, so suppose you are here in 2019, all right, you don't start counting from 2019, you start from the previous year. So 1st of January, you go back, you say 1, 2, 3, 4, 5. In the last 5 years, before the 1st of January, okay, we highlight the high of that last 5 years of the range of those 5 candlestick bar before the 1st of January, and we highlight also the low, and we highlight the median line. the median line of the range of those 5 tendency bar of the last 5 years represent what we call this critical price level, number 6. It's also called the smart median line. So the quickest way to draw it, you can calculate it to have the exact level by doing smart high, which is the high of the range of the last 5 years, minus the low of the range of the last 5 years, divided by 2, plus the low of the range of the last 5 years, Then you will find the smart median line. You can calculate it if you are somebody who is wanting to be precise. The quickest way to draw it is just use the Fibonacci retracement. So like I did it now. So from the high to the low of the range of the last tendency bar before the 1st of January. So 1, 2, 3, 4, 5. All those tendency bars are closed on which time frame? Yearly chart. I didn't say quarterly chart. I didn't say 5-minute time frame. All right, then you draw it like this. You draw your Fibonacci retracement, and then you highlight the 50% Fibonacci retracement that will coincide with the smart median line. So this is the number 6 critical price level, the most influential critical price level. So you may say to me, George, why is he influential? Well, because excellent trading setup very often occur around the smart median line. Not always, but frequently. You see sometimes. And if you look on this chart, I'm going to go quickly. This is a Barrick gold stock. If you go to this is the daily chart. Look at this. So we started the year. Look at this. All right. So we started the year here. So we put a vertical line, January 2019. And this is how the market started. So it went up. So So there was a consolidation here before. So it continued to oscillate. So this is about the market principle that stated that, all right, low volatility is often followed by high volatility, yes or no? Market principle. So it started doing this, blah, 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 blah. So it come back to the low here. And from here, look at that. So you see this one here. Let me touch upon this one. This move up like this. Now, if you see that price consolidating nicely, respecting the top like this, here again. Now, it went above it a little bit. It betrayed a little bit what is going on, because when you see that, it doesn't mean that the price will definitely go up, but it's just telling that it has a high chance to go up more. But you wait. So this one, it betrayed that the price has a high chance to go up more. But we say, it's a probability. It's not guaranteed. But if it comes back again, above this level, we want to look for an opportunity to buy, because why is it popping up all the time above it? So somebody is trying to push it away. And this is what's happened here. And look what the price did when it came to, this is the smart media line for Barrick Gold for this year, 2019. This is the smart media line at $14.58. So price came nicely. They closed there. That's a daily chart. It's a Wednesday, Wednesday the 6th of, Wednesday the 19th of June 2019. So it's not too far recently, isn't it? And look, a gap up. Why the price gap it up above the most influential critical price level? Because of the resistance here. The bullish trader do not want the bearish trader to sell it again. So to put them under pressure, they push it up. There were people who bought it here. So which means probably there were people who placed orders in a zone of the smart media line to buy. Those orders were filled in that zone, and boom, the price gap up. So if you know how to trade a gap trading, any higher low after a gap up, it's a higher probability trading setup. Any higher low above a gap up, you see gap up without filling the gap. This is very important point I need to mention. So if the price gap up did not fill the gap, and we see the first higher low like this one here, that's a higher probability trading setup. And then from there, it gap up above the smart media line to avoid the resistance, and then it continues to go up. So will you agree with me that it is reasonable to recommend to technical traders that on the 1st of January, they go on a yearly chart and draw the smart media line? So it will take you how long? how am I recording this video now? It'll take you like 10 minutes and then you're done. And then you just leave them there. You can use a color coded, all right? So you can say, all right, I will color the smart media line into orange. And then you can choose, for instance, say, okay, I will use black color, okay, for other critical price level. So you just leave them there on your chart, and you don't color any more support level in black because you don't want to get confused, and you just leave them there on your chart. And you say, all right, anytime I see the price near any black line that is a little bit thick, like I'm doing now, okay, I know that this is a critical price level. But you are not assuming anything. You may say it's just a line, it's just a key level. Yes, it's just a key level, but it's not an ordinary key level, as you can see. And decisions are made around those key levels, not by ordinary traders, by professional traders. Professional traders trade around the critical price level. And this is it. And we don't want to let ourselves down without taking advantage of those things that we can do ourselves. So apart from the 6 critical price level, all right, we also talk about the smart high. The smart high is the high of the range of the last 5 years before the 1st of January. And the smart low also is the low of the range of the last 5 years before the 1st of January. Okay, after all those candlestick bars are all closed. So sometimes, you see now, for this Barrick gold, it's near the critical price level, it's still within the range of the last 5 years, and it's near the smart median line. Sometimes the price may be above it, which means all those 6 critical price levels, including also adding the smart high and the smart low, the price may be here. So what do you do then? That's a very good question. What you need to do, if you see that, you can just measure the width of the smart range. Smart range will mean that from the low to the high of the last 5 years. So you do it like this, and then you project it up. I've done it already, you see. So you can project it like this, and then draw also another median line. That median line that you see there in green, that's the projection of our smart median line. It is also a very important key level that you do not want to forget. You can create more duplicates, so to speak, more copy. So this is the original smart median line. Now we project in the direction of the price by using the range of the last 5 years. The range of the last 5 years, that's what we call the smart range. Okay? All right? Then you just project the smart range up, and then you create a copy of the smart median line. This is another very, very important key level for this stock. And you can continue to do that. You can project it one more time again, highlight the high, the low, and apply Fibonacci retracement to it, and highlight the 50%. That will create another copy of the original smart median line. And if the price continues to go down, you do the same thing by projecting it down using what we call the market geometry. For traders that are very new to the topic of 6 critical price level, all right, all you need to do, just go to www.dayprotraders.com, all right, and at the home page, go to the home page. Did I say home page? Yes, home page. And just place your cursor on the word more, all right? Once you place your cursor on the word more, you see the drop-down menu, and then you scroll down to Market Watch. Market Watch. And then from there, on that page, on that web page, you read everything that you need to know about the 6 critical price level. So now the question is, how do we trade it? We are just looking for trading setup. Like I show you now, here, this is an excellent setup. So price gapping up like this. So now there is a different way we can trade the gap, all right? So the best approach is that it gap up. Let's see what's going to happen. Sometimes a runaway gap, the price will just continue to go up like this. So if that is the case, you just highlight this candlestick bar on the daily chart close, it gap out, highlight the high, the low, and the median line. This is what people did here. So you see that the next candlestick bar price pull back near the median line or this one. And that's where they enter the trade and they push it up to create that. After that, the price pull back. Or Sometimes they are very nice, as they did here. They pull back and then they break above it. Now implement a different time frame trading method carefully. You see the tail of this candlestick bar. That's why you must use a different time frame trading method. Sometimes they may take you out. It happens. Sometimes they may take you out, and then you will see. Do you like it? Do you want to play it again? It's up to you, all right? And here it is. Just look for trading setup in the vicinity of those key levels, whether you are day trading, swing trading, position trading, and the hedge funds are trading around. Okay, look at this one. This is on a 50-minute time frame. All right, look at that on the 19th of January. All right, look at that. Yeah, look at this one. Prices on a 50-minute time frame. It went up, running up, gap up. You see that? The 15-minute pull back like this, and then here we are. Okay, all right. Look at this. This is a very beautiful setup for scalping. Prior break above the prior high and retest it here, and the common center is broken. Use all the time the common center. Nice one, isn't it? Okay, so this is it about the 6 critical price level. I don't want the video to be too long. I would like to take this opportunity to thank the trader that is asking a relevant, essential question. What I will say to that trader, I cannot mention his name, all right, because the communication between myself and that trader is a private. So he's a TST trader. If he did ask the question on YouTube, I will mention his YouTube channel. In this case, I will not mention his name. So I would like to thank this trader for asking an essential question. If you have more questions, or if you are TSG trader and you have any more questions, please feel free to contact me on my Gmail, and in due course, I will be recording another video to answer your specific question. So to summarize this video, all right, when do we draw the 6 critical price level? We draw them on the first trading day of a new year. So January 1st, if the market open, or January 2nd, if the market is open on January 2nd, the first day that the market is open and is closed. So on that day, we want to see the opening price of that day, okay? Because we're going to use it, okay? That's why we must have the first day when the market open, okay? So then we go to the previous year. So this year is 2019. So on the first day, 2019, okay, we wait for the market to open. All right. New York, of course, New York to open. That's what I meant, New York to open. Okay, so you may say, is it London? Is it New York? Or it depends which financial instrument you are trading, okay? So the opening price is there. You note it down. Then you go back to the previous year. So because 2019, we are in 2019 now, so we concentrate on last year candlestick bar. This is very important. So if you were in 2020, we will concentrate on which candlestick bar. Last year will be 2019, isn't it? If you were in 2021, last year will be 2020. So because this year 2019, we go to 2018 last year. We highlight the opening price, that's the critical price level number 1, the closing price, critical price level number 2, the high, critical price level number 3, the low, critical price level number 4. That's done for that candlestick bar, and then we leave that alone. Now the new year has started, the market is open. The opening price of the new year is the critical price level number 5, and then we go back again. We don't do anything with this year candlestick bar. We select the last 5 candlestick bar, before this new year. All right, as I show you already. Okay, so here it is. So this is 2019. So we go back 1, 2, 3, 4, 5. So what is the highest level for all those 5 candlestick bar? Is this one. That's the smart high. What's the lowest point for those 5 candlestick bar? The range. That's this one. Then we apply Fibonacci retracement, and we highlight the 50% Fibonacci retracement of that range. Or we can calculate the smart median line, which is the 6th critical price level. It's the most influential critical price level. So we've done it now. We've done it now at the beginning of the year. Another thing that you can do is to use the measuring stick from the low to the high of the smart range. All right, and then you project it up, and then you can have a copy of a new smart median line, which is another important key level. And we can continue to do that. We can project it down again, create other copy of the smart median line. Okay, now understand that though the smart median line is the most influential critical price level, the critical price level number 6 is the most influential critical price level, don't underestimate the other critical price level. How do you trade it? Look for trading opportunity around it. So like now, you see the trading setup, okay, without the monthly chart or daily chart and so on. Implement a different time frame trading method. If you are TSTW SY008 trader, use the TSTW SY008 trader trading system to trade it. Use a trading system that is based on a top-down trading method. Sometimes the signal may fail, all right? Sometimes, everything works beautifully. The reason why you must use a different time frame trading method that will allow you to control the risk. So if the signal fails, you minimize your loss. You come out before you waste so much money, okay? And then if there is another opportunity, you re-enter the trade again. So you don't just see like you see now on the daily chart and say, oh, it's going to go up, I just buy. Here, it works, okay. But, all right, so don't just buy call option or put option. Time the market using a different time frame trading method. So this is it about Barrick Gold stock, EPIC GOLD, Golf Oscar Lima Delta, Barrick Gold, okay, Corporated, okay, in the gold trading sector, okay. If you have any question or suggestion, please put in the comment section, and of course, I will be recording another video to answer your specific question, all right. If this video has opened your eyes widely, you say, George, I can't believe it, all right? Or I like this very much. Give us the thumbs up. If you dislike it, all right, remember to mark it down. This is very important, all right? However, if you think that, George, for the first time in your life, okay, you managed to do something important on YouTube, all right, feel free to share it on the social media. I really appreciate it when traders share our video, and I say to those traders, thank you so much, all right? So the 6 critical price level are my own proprietary trading tool. To learn more about the 6 critical price level, go to www.dayprotraders.com and in the drop-down menu, click on the web page that is titled, okay, Market Watch. In your own time, with your favorite drink, do not let anybody to disturb you. Go through it. You will understand it very fast. But don't rush playing with it. Use a demo account. Practice gently, combine it with a top-down trading method. Is there a valid trading setup? And then from there, you take it like a pro. Until the next time, enjoy yourself and be very happy. We are the TSTW SY008 traders talking about Barrick Gold stock critical price level trading.